All right, good afternoon. Yesterday I didn't give you something that I had something to share, but I had a busy day. So today we have CPI. You have CPI at 4:30 p.m. That is 3:30 South Africa and Southern Africa actually. So if you're in any other part of the world, just Google 4:30 Uganda to your country. What time is it? So we have CPI at 4:30. It's a Friday. CPI is released once a month. Every month they release CPI. This is data actually. This is data from the US. So the CPI specifically, we are going to focus on the US dollar. So let me first explain what is CPI. This is called Consumer Price Index. Let me just break it down for anyone who may not understand that. Listen, these guys, they release data on CPI, meaning the change in prices. Let me give you an example. You have been buying a bag of rice at, let's say, $10, but the next month the same bag of rice is at $12. So that is consumer price index, meaning they compare the change in prices of commodities. So this means they will get data on how much, on if people spend more money on goods and services. We're talking about fuel, we're talking about food at home, we're talking about clothing, we're talking about all, even the transport, even all those things. Things that are really important, electricity, water bills, they compare. So they come out with data to say this month people spend more money on goods in the US, which is fantastic. Now this gives what? If the number, let's look at the data here. Previous, meaning the other month. Remember, this data we are getting is for January, not for Feb. Feb is still going on. This data we are getting today is for January. So the other month, which was December 2025, the CPI was 0.2%. This month, which is a forecast, this is what analysts, economists within the US are expecting. They're expecting it to rise to at least 0.3%. Now, if the number at 4:30 comes and it is higher than the forecast, if it comes and it is higher than the forecast, what does it mean? It means people spent a lot of money on goods and services, meaning the prices have been rising of things. Now, when we talk about like water bill, it affects almost everyone. When we talk about like fuel, it affects almost like everyone, even a person without a car, because the bread you are buying, it was delivered with a car to the supermarket. All the things. So these things, they affect the entire economy. That's why this data is more accurate. So if it comes out, it is maybe like 0.4, 0.5, 0.6, anything higher than 0.3. What will it mean? It means there is inflation. The inflation, okay, there is already inflation, but there is a rise in inflation within the US. Meaning people are spending a lot of money on goods and services. Whenever there is a high inflation, what does it mean? It means the central bank will have to tackle the inflation. How do they tackle the inflation? By raising the interest rates. Remember, when they raise the interest rates, they are now discouraging people from getting money into mortgages and all those things, getting money. Those who have been following me, you understand what I mean. You understand what I'm talking about. So they increase the interest rates. When they increase the interest rates, you know what it means? More money into the currency into the economy. When they raise the interest rates, it means number one. It means a lot of things, but number one, a gentleman, a rich man in South Africa who is into investing in stocks and all these things, they will look at the US economy and say, okay, the US is giving high interest on their bond. So what will this person do? They will buy into the US bonds and all that. This means the US economy is going to get more external investors, even internal investors. Even people within the US will say, oh, the interest, banks is giving a higher interest. They give over the money, meaning the dollar is going to be very strong. So if the number comes greater, you're going to see a spike in the dollar, a dollar going up. If the number comes when it is lower than the forecast, this means there is low inflation, meaning people have been spending less money on goods and services compared to the last month. They have been spending less money on goods and services. So it means there is less inflation. When there is less inflation, what does the central bank do? The central bank has to cut the rates. Remember, when they cut the rates, it means, a rich man who had invested in bonds in the US would say, the interest rates this month, they are lower. The central bank has cut interest rates. They will take off their money. Even with people within the US. Remember one thing. The richest people you see in the world, I want to mention for you like the top 10 richest people. They are all into stocks. They're having companies that they have just shares there. So it means this is a rich industry. So it means the US dollar will be weak. You're going to see a drop in the US dollar pairs. What do I mean? If you're trading GBP USD and the data comes out lower than forecast, you're going to see a massive spike, a buy. Why the GBP will be a little stronger than the US dollar. If you're trading gold, you're going to see gold shooting up. The opposite is true. If the data is higher than the forecast, you're going to see the dollar gaining strength, meaning gold is going to sell. You're going to see a massive spike down of gold. You're going to see a massive spike down of GBP USD. You understand that? So, there are three CPIs, you see. You may be wondering, why are they three? The core CPI is the one that actually causes those spikes, crazy spikes. Is the one that causes that insane volatility. Core CPI, they remove energy, they remove, what else is it, food? So it is just core data, very strong. When it comes to CPI-MM, which is monthly. So this is a CPI, it also causes a lot of volatility, by the way. Massive volatility in the market is caused by this. They are comparing the CPI of this month with the one of last month. The last one, which is CPI year after year. Now, we are in Feb. Now we are going to get data of January. The data of January 2026. When on CPI year after year, it means they are going to compare this year January's data with the one of last year January. Meaning they look at the previous month, the previous year in the same month. And then they look at this year, that month, and then they compare. So the CPI year after year is the one that determines trend of the market. After all this spiking ups and down within the first even 1 minute or 2 minutes, what determines the trend is this CPI. If this CPI of year after year is greater than the forecast, it means the trend of the market, you're going to see gold gaining strength. Meaning gold generally is going to keep taking over. If it comes out lower than the forecast, it means you are going to see a weakness in the dollar. Meaning you are going to see, after all that madness, you're going to see GBP GBP taking over, the market going up. That means it is the one that determines the trend of the market. All these things are really very, very important. That's why I encourage you can in 2026 you cannot afford to trade like a blind man. Do you know trading like a blind man what it means? You are just going on the chart, drawing lines, identifying order blocks. You'll be killed. You'll be smashed by the market, actually. That's why you need to have a strong root in fundamentals. And here comes, that's why I say, I train people how to trade, not just how to draw lines. I have a strategy I use for entries. I also teach you how to use fundamentals, deeper into fundamentals. That whenever you see the market is spiking and doing this and this, you know what's going on. You understand. This thing gives you confidence. I will share with you, I think I have one of my students. I will show you one of my students. I shared something on GBP. Was it GBP? No, it was GBP AUD. Around 5th, 6th this month. I told her the market was ranging. Let me even show you. I think on WhatsApp. Let me see. I think on WhatsApp, which is okay. It is here. This is it here. This is it here. This was on 6th. Look at it. On 6th, this market, you can see our conversation, by the way. On 6th, the market was ranging. The time I identified that, it was here. It was here. I said GBP AUD is going to sell. I'm just giving you, I just want to show you what it means to have a fundamental background. Because of what I shared about the AUD and the GBP, what had come out, said this market, once it breaks out, it is going to sell. It broke out, that was my entry. Guess what? This week, look at how the market went. It's already in 4R. We're targeting over 6.5R. It's already going down. Not only on that, even on the pair of AUD USD, the marking was there. I said this market is going to buy. Look at from the line down here, from here down here. You see the market, how it went up here. That comes with having fundamentals, knowing what is going on in the market. Number one, you get the confidence. You can stay in the trade and maximize the profit. You're in the trade and you're maximizing the profit. That's why you see most of my trades. I'll risk $50 on a trade. I'll come out of a trade with $1,000. I'm not someone who risks 50 and take 50. Who risks 50 and takes 100. I catch the trend and I stay in the market. That is actually how you become very profitable. You have the confidence that this is going to be going on, and that's why if you really want to learn these things professionally, no hype, nothing. If you want to learn about these things, you can reach out on my WhatsApp, which is in the bio. You can always check in the bio. You can reach out. We start the classes. My classes are always one-on-one. That's why I don't take in many students. Take in a few students, I train them, then I get others, something like that. And by the end of a month or two, you'll be a professional, profitable trader. So that's what I can say for now. Let's wait. I'll make a reaction video. I'll make a video that will be showing you actually, okay, this is what happened. So, thank you.